All right, welcome everybody. Thanks for joining me. And looks like we're right on time here. I see people jumping in, numbers going up as I speak. So I guess we're going to get this thing started. I got a big presentation, and I think you're going to be somewhat entertained and find a lot of value. And we're going to talk about automatic trading systems, automated trading systems. We'll look at some of the top 10 algos and why you really don't need to worry about picking individual securities and stocks. And we can let the algorithms do a lot of that heavy lifting for us. And we can even do this with option markets. So we have something for everyone here. And let's see here. I see people joining us. Looks like people from Australia as well. All right, very good. And I think everyone's able to hear me and see the presentation. So with that said, let's go ahead and get the show on the road. Remember, we're speculating and we accept risk and we try to profit on price movement. But of course, there's always risk involved. So with that said, do take a moment to look at the risk disclosure. It is important. Keep in mind that only risk capital should be used. Past performance is no guarantee of future results. In our goal today, we'll have a chat about technology that experts are using, how to transform your trading with just one click. You can diversify in the global markets, and this is available for bull, bear, and even sideways markets. So we're going to have two new solutions: algo-driven systems trading, fully automated. You can filter for performance, any criteria that you want. You just click off and on, and that's it. You walk away. And also algo-generated option trading, as well as trade alerts with automated risk and profit controls. So here's an example. This guy here is struggling with his order. Meanwhile, the robot here has got it all done in a nanosecond. So stick around. We'll use our time wisely. We'll have these live demonstrations of these new solutions. We're going to offer a special offer, something we just recently started doing. We're getting good feedback on it, and we'll even show you how to get involved for free. So with that said, we're going to look at what's happening this week, a little bit about us, trading secrets, algo traders, live demonstrations. We'll talk about options, and then getting started with some FAQs. So here we go. Here's what's happening. Just a quick shot I took beforehand. Here's the E-mini S&P 500. We're going to talk a lot about that market, the ES. And here's a 60-minute graph. So we've been in this uptrend, but I think in the last hour or so, we might have just broken that. And here's the euro currency. And don't worry about it if you don't trade currencies. I'm just showing you some ideas here of how these markets can be volatile. And then, of course, they're kind of coiling sometimes and go sideways in a range. And this will all come together as we get into the live demo. Same with crude oil. Here's what's been happening. Remember, we even went negative on that front month crude oil, negative over $40. Been doing this since 1991, of course, never seen that happen. And here's gold. Gold's been in a nice uptrend since March. And lean hogs, you're thinking, who the heck is trading lean hogs? Well, don't worry about it. I'm just pointing this out. We're going to circle back, and you don't need to know anything about hogs. We're not going to talk a lot about that. But here's what's happening this week politically, geopolitically, and in the markets, economically. This was fascinating. I saw this earlier. 78% of Americans are now willing to pay more for products not made in China. 40% said they will never buy anything in China or made from China. So interesting, a lot of negativity. China is now outraged by the U.S. providing some torpedoes to Taiwan. So I guess you could say the trade tensions are mounting and maybe even going beyond trade tension. And employment data, look at the initial jobless claims here. We've never seen anything like this spike in jobless claims, 38 million jobless, but yet the NASDAQ is up 35%. Crazy. Look at that spike here. Never seen anything like that, continuing claims. And here's a crazy looking graph. Payroll jobs since 2010, about 22, 23 million jobs were created. And look at this, in the last 9 weeks here in the US, you're approaching 40 million jobs lost. Very, very dramatic economic shift going on here. So, but meanwhile here, look at the Dow. almost acting like nothing has happened. The big sell-off, and we're kind of approaching where we started from. Kind of a disconnect there. Some optimism. Stocks seem to be rallying on optimism. And I think what that really means is all the liquidity from the Federal Reserve. So that's kind of another way of saying it, I suppose. And the Dow yesterday up 369 points as states begin to reopen. Meanwhile, Fed officials are still commenting that there's considerable risk in the economy, and I think that's kind of self-evident after $2.9 trillion in the past 2 months being pumped into the economy. Big investors fear a second wave could derail the stock market. So, of course, the point is that there's a lot going on, but remember, prices are correct whether you believe it or not. In other words, don't fight the market, don't fight the tape. Trade what the market gives you. A little bit about us. We're Altivest. We're a brokerage firm since 1997, and that's me there with our colleagues on the trading floor. It does not look like that anymore. The algorithms have taken over, and we're going to talk about that. We're, of course, regulated. We have staff in California and Illinois. We've traded millions of contracts and options over the years, and we, I think, are experts at it. So we've done a lot of trading in that time. So with that experience, I think we can provide and convey that to you. So what we've learned is don't try to figure this out by yourself. Use our help. And just like Edison, we've not failed along the way, just found 10,000 ways that don't work. A lot of experience. So the trading solutions we're going to talk about have decades of input and development from industry veterans. And my name is Erik Gebhard. Been doing this about 29 years, co-founder of Altivest. And I started in 1991, and I have my BS in business administration from the University of Southern California. Got started way back when in a investments course at USC. That's my textbook there, all my chicken scratch. I enjoyed those classes actually. And we were studying crude oil, gold prices were moving. This was during the invasion of Kuwait. Eventually I got started in the securities industry and then found my way back into futures and options, and that's where I've been since. So with that said, and now that we've gotten past the introduction, let's jump into the trading secrets here. And what I want to do here is shut off the webcam for now. That will gain us more real estate on the screen, especially for the demos. Okay, you don't need to see me. Here we go. Day trading. It's overly optimistic, all the hype around day trading. Now, if you're doing it and you're making money, more power to you. I'm not trying to be cynical, but it is difficult. Look at this. Here's a guy that used to run day trading firm trading and training people. He said about 300 or 400 people over a 5-year period went through the day trading program there, and basically only 14 became successful traders, able to consistently profit year after year. So 3.5 to 4.5% success rate. So it's difficult. And part of the reason why is you need precision when you're doing that type of thing. You have to pick the correct market, direction, strategy, your entry timing and price, and your exit. You got to manage the risk and reward. So all that has to be lined up. And it turns out that forecasting isn't easy unless you're a monkey. How about this? Simulated results of 100 monkeys throwing darts. Average monkey outperformed the index by an average of 1.7% per year since 1964. So there's your best stock picker there, or money manager. So remember, emotions, that's secret number 3. This is a big one, kind of leaving us perplexed like Maxwell Smart. So hope, fear, anxiety, greed, boredom. We're going to talk about greed and boredom in just a second, but those become our worst enemy. We are wired, we have bad wires. We're wired with a built-in bias to sell the lows and buy the highs. That's really what Mark Lindheim is saying. And from real investment advice, your brain is killing your returns. I like that phrase. Now this is fun, or not, but here's from the Financial Times. Frustrated sports punters turn to U.S. stock market. So if you're not familiar, sports punter is basically a gambler, someone who's betting on sporting games and events. So look at this. All the big brokerage firms, they're enjoying a huge boom in new accounts during the lockdown from COVID. Look at this. Look at this big spike here the last couple of months. So what on earth is happening? And look at Robinhood. You're all familiar with Robinhood. Same thing. big jump in accounts and trading and volume and activity. Well, here's a quote from somebody from that Financial Times article. It says, a few weeks into the shutdown with the matches on hold, meaning the sporting matches, he fired up a dormant E-Trade account with several $1,000s begin to buy stocks. I'm not here for the long run. I just want to throw a few $1,000 at something to see if I can make a few hundred. So there you have it, folks. There's a big surge of what is essentially gamblers in the market in the last couple months. I thought that was fascinating. So, 3 common biases when making investment decisions. It's from the Motley Fool. Confirmation bias, anchoring bias, recency bias. We're not going to go into all that, but I'm sure you're familiar with that and what that means. And with that said, let's take a look at this. That's what I mean. Don't fight the tape. You don't want that on your gravestone. So, with that said, number 3 here, part 3, don't fight the algos. They're dominating the markets. Bloomberg, robot analysts outwit humans on their investment picks. That's kind of obvious. 80% of the stock market's now dominated by algorithmic trading, causing the sharp drops and rallies. So we're talking about large institutional firms, sovereign wealth funds. I was reading about some of the Middle Eastern sovereign wealth funds are now getting back into stocks pretty heavily. So that's what's making the moves in the market, not us, not the retail trader. And here, take a look at this here. Algorithmic trading is actually increasing as stock market volatility here is jumping due to the coronavirus. So that's all algorithmic trading. So that's what you call revolutionary trading. Here's a little clip I took down on the NYMEX years ago. It's kind of grainy, but nonetheless, all looks a little bit antiquated now, but it really was effective and it still is effective. But with that said, here is the competition you are against now, not the traders on the floor. So no emotion, they run automatically, a built-in risk controls. Reminded me of the Terminator with that non-emotional comment. So this is from the movie. The Terminator is out there. It can't be bargained with, can't be reasoned with. It doesn't feel pity or remorse or fear. It will not stop ever until your account is dead. So I took liberties with the green text there, but nonetheless, you get the point. Non-emotional. So if you want to use the algos, maybe you should use those, put them on your side, not try to fight them. So here's the solution. Automated systems trading, very user-friendly, novice or advanced traders. You can filter for all sorts of parameters, risk, reward, capital, markets, you name it. You can do it in minutes a day. And you, of course, will have everything automated. You just set that switch to off or on. Bull, bear markets across the globe, doesn't matter, up or down, and multiple sectors in multiple markets. So here's the live demo. We've put all that experience into a fresh approach. This test pilot here sort of is what we were over the years and maybe still are. So if you like what you see, we're going to show you how to take action. So here are the new robot friends at AV Systems. And with that said, let me switch screens. And we're going to jump into a demo. All right, this is fun stuff. There it is. You're now looking at the dashboard, or essentially the home page for AV Systems. If you were trading, this is what you would see. And we're going to go through this step by step. Basically, we're going to follow 1, 2, 3, and 4. It's that easy. First thing you do, you would explore and choose your systems, basically filter. Then you would subscribe to any system that you liked, and then you would activate that system by essentially flipping that switch to on. And then once it's activated, you would monitor the performance of the systems. So that's how you do it. And then we're going to take a look at the top 10 and show you how this all works. So first of all, let's say, how do you explore? Well, you see there's this table here with all the different headings. Well, you can customize that table. So that's nice. You could essentially add any of the criteria. Let's say you want to look at the worst session. You don't care about the profit factor. You don't care about the TM rating or the name of the developer, or maybe if you have it tagged as a favorite, or what have you. And then maybe instead you want to see that it was live. And then you just click OK. So now all the headings have changed according to how you've customized that table. And just for the heck of it, I'll go back and just go back to the default setting. I wanted to show that to you. So now here's the next thing here. How would you filter? Because right now you see there are 1,851 systems available on the platform. And right now you're looking at 1 through 25 on just this one page. And you can see that here's the name of the system, the market being traded, the type of system. There's only two, intraday or swing. Intraday means you're in and out on the same day. Swing means it may try to hold a position for weeks at a time. Name of the developer, starting date, so on and so forth, and all the different performance metrics. So here's the way to do this. You're going to want to filter. So there's quick filters here. So let's say you wanted to look at systems that have been tracked for more than 1 year and they have profits. So you would click that. So now you see you're down to 505 systems. And now you want to look at the systems that have clients trading and the required capital is less than $5,000 per system. So you click on that. And now you've got 35 to choose from. So you can see here that there are now 35 to choose from based on those filters. Or you could clear all those filters and then do this. You could pick an advanced filter or filters and really filter any of the systems based on any of these criteria. So maybe you only want you only want systems here that have been traded live since let's say you want to go back to I don't know, 2018. From August 9, let's see, 2018, just say August 9, just pick a random date. And then there you go. So now there's 469 to choose from. And then maybe you want to add another filter where you're thinking, I'm really risk averse. So, perhaps I want to look at a performance or risk and return metric here. And maybe the worst drawdown, you're not wanting to take a drawdown that's less than or worse than, let's say, I don't know, let's just say $25,000. Let's see what we get there. Okay, filtered it even more down to 381. And maybe let's just throw one other out there. I don't want to waste a lot of time on this, but let's just say the total profit and loss is, let's say you want to say, I don't know, 50,000. Let's see if that makes a difference on the filter there. Yeah, so now we're down to 234. So you can see you can play with this and you can really narrow that range of opportunity down. That universe of possibilities can be narrowed down based on any of these criteria. And so that's how you really customize it and then begin to essentially filter for what suits you and what you like. So let's say we've done that filtering and now you're looking at let's just pick this first one here. Let's click on it and drill down. Let's take a look at it. Okay, so this trades the euro currency. Here's the name of the developer, Serious Trading. It's a swing system and it costs $75 a month. That comes out of your account. That goes to the developer of the system. And you can see the equity curve here as it's moving up in profitability. It's total profit and loss, tracked profit and loss since September last year, live profit and loss, worst drawdown, suggested capital, and required capital. So I'm just kind of looking at this just as an example. I haven't even looked at this one in the past, but just giving you an idea of how this works. Now let's scroll down here and I'll explain this in a second and how this works. But you can see all the different metrics here, your total profit and loss, your annualized returns, so on and so forth. I don't go not going to go too deep into all that, but this is a interesting little table here. So you can see that it started back in August of 2018, and it was back tested starting. That's what the white background means. Starting back tested, starting back then. And then when you see it turns kind of this yellow color in September, that means it's now on the system's platform here, and it's being tracked on the platform. And then when it turns green, that means someone initiated live trading, and there's live trading occurring in this particular system. So you can see that just occurred in May. Also want to point out something too about these systems. Remember what happened in March to the stock market? Well, here, this system did very, very well, produced over a $3,000 gain. And that's why we like these systems, in part because they offer non-correlated returns. And let's see here. Trade log. You want to get granular and you want all the details? Absolutely. You can do that. There's all full transparency here with all the trading activity. It shows you the time of the trades, the volume, the positions, the pricing, so on and so forth. And then, of course, the session log day by day. So you can see here, starting back, in this case, here's April 30, volume here. It traded, but there was no end of day position. It got out before the end of the day, so on and so forth. So you can get very granular, full transparency. There's nothing hidden. It's all basically here for you to see. So let's go back. Let me just close this here. And let me go ahead and show you how to activate a system. I'm going to clear everything. And let's take a look here. I've seen this one. We have actually some experience with this one. Here's a copper trading system called Samurai Copper. And we have some live trading going on in that. So let's take a look here at this one. You can see the suggested capital and the required capital. Let me point out the difference and how this works. Suggested capital is always going to be higher, and all of the performance numbers, all the percentages, and so forth are based off the suggested capital number. And that's just because it's just simply a more conservative approach to margining the system. And required capital is the bare minimum you would need to trade this system. But keep in mind, if you did trade it with 5,100, not 25,000, all these numbers are going to be 5 times greater or worse, essentially. You're increasing the leverage. So with that said, note here as well, look at March of this year, over 11,000 profit on this. You want to see what the activity was in March? You just click on it, and you can see day by day, starting here on March 2nd, you can see had a trade, profitable trade. The $70 license cost was taken out of the account. And then you can see each time it traded, the result here, and you can see the accumulated profit and loss for the month. And then you can see it here on the graph. So once again, you can see how these are completely separate and non-correlated to what may be happening in the overall financial markets or stock market. And that's why we love these systems. And let's take a look here. If you liked the system, let me show you how you would go ahead and move forward with it. So let me close this out. Let me just pick, here's a NASDAQ system. Just picking this randomly. But this is what you would do. Actually, this looks like an interesting one here. It's doing very, very, very well this month, over 108% this month. And once again, I think these are the kind of systems in the stock indices that sometimes thrive on the volatility. But nonetheless, so you would just see this padlock, you would just click on that, and you would click buy license. 1 unit is 1 system, and payment per month, and you would then read and accept the disclaimer, and then you would just click accept. Then you would just click activate. And let's see here. So here you can do an immediate activation, or you can activate on the next session. And then you would just click activate. It's just that simple. Now what happens is that would show up under your My Systems. Let me take a look. I'm not even sure in this demo account, if I have enough available to add another system, just a demo account I use for these kind of presentations. It may, yeah, see, that's okay. Good to see that. Rejected due to insufficient balance. So that would happen if you try to add too many systems, you don't have enough money, it'll reject that, which is good that you saw that. So let me just show you how this works. Once you then activate a system, it shows up under the My Systems here. And these are just some random systems I've chosen every other day here in the demo account. But you can see here, here's an E-mini S&P system and has no trading activity. Here's a copper called Atlas Copper, and it shows you here the closest order, the last trade, the P&L, the last price, and today it's up $900. And then if you want to get more granular, you just click on it and you can see the stop order that's in place. The algorithm is doing all this. You're doing absolutely nothing. Oh, excuse me there. Let me go back to that one. Okay, we're back. And then you can see here is a silver, not making, having a loss today, but accumulated overall, it's $5,500 positive. So you can see this is where you would see day by day how all your systems are doing, accumulated profit or daily activity, how things are doing. Now, if you wanted to take, let me show you this real quick too. We have actually quite a few clients trading this system, this E-mini S&P system. And let me show you here. Look at the March result. $82,000 on this particular system during the month of March. And once again, the volatility, the VIX moves higher, stock market gets volatile, and these systems, for example, this one here, which is a swing trading system, was able to move in and out of the market and capture basically gains. You can see starting on March 2, you can see how it was performing. Some days it had big numbers as the markets were moving a lot. Now, of course, there's always that caveat. Past performance does not represent future results. I'm just pointing out that historically, these types of systems can do well when other traditional assets are not performing well. And so you can see here, you're running ×1, that means 1 unit. Now, if you wanted to turn it off, you would then just click Stop Strategy, and then you can either stop it immediately, or they'll allow you to take it on the next, sometimes depending on the system, it'll allow you to take it on the next signal, and then you just click deactivate. So that is so easy, so simple. Now you can see here, once again, you can get very granular. You can see all the fills on any given day. You can select for any product that you're looking for, any of the systems that you have active. You can see all the orders in place. You can see there's an order here in copper. It's a stop order to buy at 267.60, and it's 24.60 away from the market. And then you can, of course, drill down. I'm sorry, not drill down, but you can go back in time. You can filter for any date range and see the performance. So there's just so much here you can do. It's all available. It's all very transparent. And then here are the top 10. Let's jump into that. Okay, so here we go. Here are the top 10 for the current session. You can see it's live, being traded right now by the bots. And you can see here the previous session, May 20th. There was a NASDAQ system. Here's a DAX. A lot of these are DAX, meaning the German stock market index. Very actively traded index, but you don't need to know anything about it. The algorithm is built and coded and automatically trades on your behalf, no matter if it's the DAX or if it's, here's the NASDAQ or here's the mid cap 400, you name it. So you can see here this particular session yesterday, this DAX system did very well. Look at last month. Here's a mid cap 400, did very well. Last year, NASDAQ system, E-mini S&P, E-mini Dow. So you can see a lot of the stock market indexes, these particular systems can do very well. and then going back to 2001. So this is always kind of a fun page to look at. And you can see here at a glance that, here's a gold system. You can see it's short now from 1741, has a buy stop at 1748. I don't think I've seen this particular system. Let's take a look at it. So here you go. It has live clients trading it. Look at March. Big month, 38,000 in March on this particular gold system. And it is an intraday system, meaning it's always out by the close. It costs $100 a month. If you wanted to activate it, you would just, once again, click that license to buy and then activate it. It's just that easy. Your suggested capital is $10,000. Worst drawdown, $2,400. You can see it all listed here. If you don't know what that means, you just click on the button. It tells you. So there you have it. That's a lot of fun to look at these top 10 systems. And, sometimes you'll find, here's this one called Black Motorcycle. It's been in the top 10 in and out for quite some time. Kind of a clever name. But you can see that one here. It's an E-mini trading intraday, $150 a month. And once again, live trading, live clients, real money, real results, doing very well in this environment in March and April. It doesn't really matter. March, stock market was down. April, stock market's been soaring higher. Either way, it doesn't matter. These systems are going to be short or long, just with no bias and no emotion. All right, very good. So let me just go back, and I think that's a good look and a good review of the algo trading system platform called AV Systems. And I think you've seen how powerful that is. It looks like there's a few questions here. Let me see if I can get to a few of these real quickly. Someone asked about 1 unit means you're going to be trading 1 contract. And the systems are part of the AV Systems platform. So you'd open an account with us at AltaVest, and then you would then have access to the AV Systems platform. So that's what that means. And then the P&L that we were looking at, it could be for one particular system or for the entire account. So if you want to look at the P&L for one particular system, you just click on it. Say in this case, Samurai Copper. And that's just one, all this data is about this one system only. This only relates to this one system here. And then if you want to see how your systems collectively are doing, you would just go under My Systems, and any active systems that were live trading would be listed here. And then you would see here that today's profit and loss, and then the collective or accumulated profit and loss from all these systems that you have trading live. Okay, and their margin, well, the margin, there's no really, they don't call it margin formally, but essentially you're going to need to turn on a system, you're going to need a bare minimum, the required capital amount. In this case, 5,100, preferably suggested capital of 25,000. Because remember, all the performance numbers are based on the suggested capital of 25,000. So if you had a 50% gain on a system based on the 25,000, but you were actually using the 5,000, well, that's really a 250% gain on that 5,000. But of course, it can cut both ways. You could have a 50% loss, and it would end up, you'd end up being in a situation where the system would then stop trading because you don't have enough margin. All right, good questions. And let's see here, maybe a couple others, but I have some other material to get through. And people are asking for small accounts. The required capital, excuse me, got a frog in my throat here. The suggested capital, a lot of these is probably in the 20,000 range, some a little bit smaller, but you can filter for that if you wanted. You could say here's some smaller ones here for the required capital, but you're limited. You're definitely limited to the availability. And someone's asking about 1099s. Yeah, we'll get into that. We'll get into in the, let's see here. We're only trading futures with this, and they're asking about the commissions are $15. That's just a flat rate. That's round turn, so 750 in, 750 out. And let's see here. All right, let's see here. Yeah, you can filter for a worse drawdown. So you're always going to look at that as well. You can just pick any strategy and look at the worst drawdown. Some of these are going to be very, very big, but they're also going to have a large suggested capital. Look at this, $800,000 suggested capital for this system. And you can see the drawdown there, over $260,000. It's currently on a drawdown. So you're probably not going to have a lot of activity in this particular system. It's just not that much of a user-friendly one. All right. Someone says amazing results. Well, no, I mean, not everything's amazing, like I just showed you. There's always risk of loss, of course. And that's why you'd want to filter for the systems that you find are most appropriate for your risk tolerance. So, very good. And let's go ahead and let me shift gears here. And let me show you what else is next. Just one moment. Okay, do you feel a little bit like this kid? All right, so good stuff. So you're thinking, this is what you're thinking. This is great, but I've never traded futures, or this is great, but I've never this or that or the other. Well, remember, it doesn't matter. We talked about hogs earlier. Who cares? We don't know anything about them. You don't have to know the fundamentals or the technicals. The algorithms do all the trading. You don't need to know about the yen or the DAX or the copper or the Dow or hogs or bonds or copper or gold or crude or whatever. The algos do the work. They trade any of those markets up or down. It makes no difference. They use all the risk and profit controls that are built in precious metals, energy markets, stock markets, currencies. And then here, futures trading. This is where you want to be, folks. Up 43% in volume in Q1, over 11.4 billion contracts. This is where all the activity and the volume is. They're global, they're liquid, transparent, there's leverage, there's diversification. You go long just as easily as short, or at least the algos do. We don't do anything, right? And they're cost effective. You're able to filter for risk, profit, capital, any of the metrics that you want. You saw how you can easily filter for all that. And then it's powerful. It's powerful, and it can be a lot of fun to use as well. So with that said, let me jump into the algos and options trading. If you've never traded options, we're going to make this super easy. If you had, you've not seen this before. So there's something for everyone here. It's an automated options trading secret weapon, up, down, and even non-directional markets. So we're going to remove all the guesswork for options trading. You can do it in just minutes. And we're going to talk about the advantages of futures options. So for speculation, we can use options, right? Whether the price moves up, down, or sideways. There's trading places, Valentine and Winthrop. They weren't trading options, they were trading orange juice futures, but they were speculating. Of course, they did have the answer though ahead of time, didn't they? Or hedging. So maybe you have traditional assets, a basket, a portfolio. Maybe you can use options to hedge that portfolio. You can do that too. So a quick look at indexes. We like them because they're convenient to follow. You don't have to follow thousands of securities and stocks and ETFs. They're less volatile day by day. And individual stocks, well, here's Virgin Galactic, down 78% since its February 20 high. Here's Boeing, a blue chip, down 78% in a year. And they can move in different directions, be non-correlated. We know that. I thought this was interesting. Here's the big sell-off in March on the NASDAQ. Meanwhile, here's that Zoom technology video conferencing just started to shoot straight up. Now you're kind of more correlated, but they were completely inversely correlated for a while. Let's look at insurance companies. You pay the premiums, they make the money, right? So they are paid to assume and manage risk. They sell and manage time, they insure themselves, they hedge, they're patient and consistent, and they use long-term odds. They use math, probabilities, that's all they do. Statistics, actuarial tables, expected returns. They're crunching numbers, and that's what they're doing. Just like a casino, same thing. All the games in a casino, they're all biased in their favor. Obviously, that's how they can build those billion-dollar resorts. Here's an example. You spin the roulette wheel on that zero, you do it enough times, you're going to lose $5.26 on average. That's the house edge. So they'd like to have you sit there for 1,000,000 years spinning that wheel because they're going to make money off of you in the long run, even though at times they will pay you. So we look at higher probability in terms of baseball analogy here. Let's look at base hits and not home runs. Here's a batting champion, Rod Carew. He hit no home runs, and he was still the batting champion. He won all sorts of batting titles, most valuable players, so on and so forth. So high probability options trading. Well, we like to collect premiums, what we call base hits, by selling or going short options. Be consistent and patient, manage risk. You will have losers. Manage reward, don't get greedy. And you need the proper tools. That's important. So remember, we're not looking to swing for the fences. We're looking at lots of small base hits. So short option strategies for premium collection, non-directional, bullish or bearish. These are high probability outcomes with predetermined risk. What am I talking about? Credit spreads, insured positions, predetermined risk and reward, non-directional. Here's an example of a graph, and we're going to get into this in just a second. We like to do this on a stock index, and we're going to show you why we have a margin of error on these trades. Now, before we do that, let's talk about the delta for an option. Here's an example. The S&P is at 25. Here's a 2150 put at 15 points. Delta is 0.25. And the market then drops to 24.90. So it goes from 25 to 24.90. What happens to the value of this put? It was 15. Well, now it gains 25%. It's at 3.75 points. It gains 18.75 is where it now trades because of that 0.25 delta. It's simple, but here's the real catch, or the real way to look at delta, is the approximate probability of expiring in the money. So 0.25 means 25% chance of expiring in the money and a 75% chance of expiring worthless. So remember, delta is always moving with price and time as well. And it does not represent the probability of a winning trade. So the other secret here is theta, sensitivity to time. So if you have, remember, options are a wasting asset, and theta is a negative number equaling 1 day of time decay. So here's an example. Options at 10, theta is negative 0.05. So the next day, premium would be 9.95, and the next day after that, 9.90. Starts to decay on you, all things remaining equal. So here's what it looks like as you approach time zero. The percent of that premium just starts to drop. So you want to be boring if you're selling credit spreads. So the whole goal is to sell out of the money spreads and watch time pass. You want to be like this guy. I think that's Milton from Office Space. So you want to be boring, but it's never that easy, right? Markets don't make it that easy for us. So here's an example of a call spread that you sell. So you're selling the 35.30 call, that's the red line. You receive 4.5 points, and you buy the 35.50, and you pay 2.25. So you collect $112.50 minus your commissions. It's just that simple. Here's a put spread. You sell the 29.90 put at 3, and you buy the 29.70 at 1. The net you collect is $100, and that's what it looks like when you're selling a put spread. Now remember, these are not naked options. These are always insured. They're covered. You do not want to be like this poor cat. Another benefit, covered option spreads, there's no margin calls. If you're selling naked options, you will get burned eventually, especially because of margin call issues. It's a mess. Don't do it. Do not do it. Now, here's a strategy called an iron condor. If you've heard of it, that's okay. We're going to go through it quickly, and then we're going to show you a unique way, a unique variation, actually. If you've not heard of it, it doesn't matter. It's simple. It's just a combination of what we just saw. So this is what it looks like. You sell an out-of-the-money call spread, and you sell an out-of-the-money put spread. And in this case, it's the S&P index, and it's bouncing around. And we're going to look at that in a demo. So here's a secret strategy called a dragonfly. Has 6 legs, you can see, just like a dragonfly. It's a non-directional variation on the condor. So here's what it looks like. Let me show you here. First of all, you'll notice there are 6 different strike prices, 3 puts and 3 calls. Now, let's say here, the 33.30 call, you sell 4, quantity of 4. You buy 3 further out of the money calls, and you buy 1 closer to the money call. In this case, it's 40 points closer to the money. So by buying this call here and selling these 4 calls and buying these 3 calls, for every short option, you have a long option, so that means it's a covered spread. But notice this is 40 points closer to the money. So this will actually hold its value much, much more so than these further out of the money calls. It will gain in value quicker and it will lose value slower. Completely different dynamic on this trade. And you do the same thing with the puts. And we're going to run through an example. Here's another variation. You can just do a directional. So you can just sell the calls on the dragonfly. So that just going back, you see this top portion of the dragonfly, sell the calls, collect the premium, and look for the market to just chop around or maybe even go down. Same thing here with a different strategy. It's directional. We call it a bear hedge. You sell an out of the money call spread, and with that money you collect, you buy an out of the money put spread. And then you look for the market to drop, hopefully, and we're going to look through an example on that. So same thing here with the bull hedge. You can buy an out of the money call spread and then sell an out of the money put spread to help finance the purchase. All right, so with that said, here's the real question people ask. How do you know what trades to make? How do you start? What do you sell? What do you buy? Who's doing what? What's the price? When to do it? How do you manage the risk and profits? You know, how would you even know where to begin? So here's that drum roll sound. It's called Theta Trader, pre-built credit and debit spreads. And the algorithm that we created creates something called Theta Trades, same strategies that we just looked at, bull, bear, and even flat market strategies. And then we use automated risk and profit management. Automated risk and profit management for your options trading. It's amazing. So with that said, we're going to show you how to take action. We're going to jump into a demo. And let me go ahead and switch screens. All right, you're looking at the dashboard for Theta Trader. All right, this is great stuff, folks. So we're in the right spot. Let me increase the size just a little bit, make it easier to see. So we're going to go through these sections one by one. You'll see Theta trades here at the top, open sold positions, open bought positions, your account info here, just a demo account, and then any current quotes on the stock indices. So let's start at the very top. You'll see there are bullish strategies, bearish, and neutral. And then we're looking at the ES or E-mini S&P 500 and the Russell E-mini. And we trade the ES primarily. That's where all the volume and activity is. And I'm going to show you what I'm talking about in just a few minutes. But just know that this is the place to trade options. Now, we were looking at condors and dragonflies. Let's look at a condor. You click on this and you can see the algorithm has already pre-built all these trades for you. that you can choose from. 16 to 58 days till expiration. And each one of these is a different trade, each line here. And you can see here that this is your maximum profit potential at expiration and your targeted annualized return at expiration. You'll notice that the less time, the higher that TAR number. So that goes without saying, but can't expect those types of returns to be annualized. It wouldn't be realistic to expect to place this trade every 16 days for a year. So just use these numbers here to compare one trade to another. So let's take a look here. I like to, in the demo, just look at the one that has the most time. So you can see the algorithm has pre-built everything and provided you all the details on this trade. Let's go through it. First thing I like to do is look at a chart. There's perspective. Here's where we are. You're selling this call spread and you're selling this put spread. Okay, so that's what it looks like on the graph. And you can see that let's start here at the top. 240 is the price the spread settled at. It's a net premium of $120. And your put risk is $1,000. Now your cash required is about $901. Your profit potential is $99. Targeted return on cash is about 11%, and then the target annualized return. So here's the question we get. Why do I have to use $900 to make $100? Well, remember, we talked about high probabilities. We talked about delta. Let's take a look. You're selling this 2460 put, 9.86 delta. That means there's over a 90% probability of expiring out of the money. Same with the call here. That has a 6.66 delta. So you're talking over 93% probability that this call is going to expire out of the money. So that's what we're talking about. These are the higher probability outcomes that we like to focus on. Now, we also don't recommend ever holding a trade till expiration. We always want to be out for a win or for a loss before expiration. So keep that in mind, and I'm going to show you how we automate that. So here you go. It's all pre-populated to sell. The quantity is already defaulted to 1. Let's just say you're doing, oh, I don't know, let's just say 5 of those. Okay. And then you can see it changes the capital required to 4,500, profit potential 495, so on and so forth. And then you just go ahead and place that order. And there it is for today. It just assumes you're filled. Now here's another feature. We have a trade simulator. You can backtest and you can do all sorts of, have a lot of fun here with this. So I've already loaded some, and this will help show you how the condor works and the dragonfly. So here's an example, which you do on the simulator. Squeeze it down, you can see more of the screen. Use these buttons here to go backwards and forwards in time. Then you can see day by day as the trade transpires. So let's go ahead. So you can see here day by day, trade is starting to turn green, going profitable. That's because of theta decay. Remember, we talked about time because the market's just kind of going sideways. So let's see what happens. Okay, all is well. Green means the RTI, the risk thermal indicator. Green means good, do nothing. And look at this, it turns profitable. Blue means profitable. Now here's the real kicker. Here's the key, folks. You can automate this. You don't have to do anything. There's a setting in Theta Trader. Whenever it turns blue and the algorithm says to take profit, the order is placed and transmitted for you, and you don't have to ever do another thing. So that's why so many people love using the automation features in Theta Trader, and I'll show you how that works in just a second. But let's say you were trading this and you ignored the blue profit taking signal that the algo gave you, and maybe you didn't want the automation on. So I don't know, what would happen? It turns yellow, elevated risk. Now your trade is turning red or negative. And look at that, now it turns red. Too much risk, you're losing 200 bucks on this trade. So if you avoid those signals and those don't use the automation features, you could take a winning trade here and turn it into a losing trade. So that's why it's so important, and that's why we love the automation features and following the algorithm and the RTI. Let's take a look here. Here's another trade. There's another iron condor. And let's run through this real quickly. You can't see enough of the screen. Sorry about that. Let me squeeze it down here. There, that's better. Turning a little negative. Now it gets yellow. Elevated risk, but still don't do anything. Now it's green again. Now it gets orange. Now it gets red, and you take a loss. So on February 28th, you take a loss. So you can automate that, take your lump, and go on, take a loss, and move on to something else. Now, let's assume, now remember, I didn't point out the date, but let me point out the date. You placed that trade on January 2 of this year. That's an iron condor. So what if you did a dragonfly on January 2? Let's take a look. Let's look at the difference. It's green, turns yellow, elevated risk, and then it turns blue. Take profit. You get a profit taking signal to get out of that trade, take your profits and run. So you can see how in the case of this this condor, you ended up taking a loss on the 28th. On the 21st, this gave you a profit taking signal to get out. Now remember, we're going to look at another example here in just a second, but let me run back to the dashboard before I run through another example. Let me show you how easy it is to place a dragonfly trade. So here you are, you pick the neutral tab, you go to dragonfly. We'll pick the July week 3, has the most time. And you can see here with the dragonfly, the price settled at 9.1, net premium of 455. The cash required is $4,600, profit potential 371. Your targeted return on cash is 8%. So it's always going to be a little bit less than a condor. And that's just because of the different structure of that trade. Remember how it looks here, because you actually buy this additional closer to the money call and put. So that's essentially like an additional hedge or insurance. So there's a small price to pay for that, but of course it does, in our opinion, reduce your risk, especially in certain circumstances, like we just saw in that simulator. All right, so you can see here the puts you sell and the calls you sell are the same as that condor example that we just looked at. There's still the high probability calls and puts, and the quantity always defaults to 1. So let's just say you're doing 2 of those at a price of 9.1. You can leave that alone, or you can change it. And there it is, selling the 2 dragonflies. It's just that easy. So let's go jump back to the simulator. Let's look at a couple more of these. Let's look at another iron condor. So here's one from November 20. Okay, it's turning yellow, elevated risk. And then look, you get out on November 16 and you have a loss on that trade. Or I'm sorry, not November, January 16. So let's look at what happens if you did a dragonfly on that same day. Instead of doing the condor, you did a dragonfly. Look at that. It turns profitable on January 3rd. Gives you all this opportunity to get out and take a profit. Now, if you look back here on January 3rd, the condor still was in a little bit red. You were still losing a little bit of money. So what's the difference? How come on January 3rd, the dragonfly is actually profitable? Well, remember, you own this call option, and it's closer to the money. So as the market's moving closer, it's gaining in value much more quickly than these out of the money calls and here that you've bought and sold. So therefore, it gives you a chance to capture that value and get out and take your money and run. So here's another trade. Here's another condor. Let's look at this. So look at that. Turns profitable with 2 days left. So this trade ended up making money. Now let's assume you had done a dragonfly on that same day. That was Valentine's Day last year. Look at that. Turns profitable with 14 days remaining. And actually, I'm sorry, it turned profitable with 34 days remaining. So you had an opportunity to close this dragonfly out with over a month of time left. If you compare that to the condor, you had to wait till there were 2 days remaining. So it gave you a much earlier exit opportunity with the dragonfly. And so you can see the different dynamic. Now, it's not to say we don't like the condor at times, but dragonfly, it's basically, I'd say it's a slightly lower reward potential, and it's a little more risk averse. Now, how do you do all this? How do you get this all set up? You go into My Account, you go to Settings right here, and you can see that you can activate your risk manager. You just check the box. And the profit directive, you just check that box, and then you save those settings. And that's all you do. And then that automates everything in terms of whether you get out for a win or a loss. That's all automated for you. And then there's a great help file here as well with further explanation on, let's take a look here. You can see here the color-coded RTI. It's all explained here. Here's a little description of all the different strategies. It's all available in the help file. And there's also video tutorials, educational videos here as well. So there's a lot of good stuff here. Now let me show you this. Let's go back to the dashboard. So there is also, if you want to look at your open positions, you can do that from the dashboard or a separate page. So here are all the open positions. You can see there are 15 sold positions, 2 bought positions. You can also buy premium or buy option spreads if you'd like, but those are not high probability outcomes. So you can see the 2 bought positions are sitting on a loss, which is not uncommon, and the short positions are sitting on a gain. You can see actually both of the bought positions have a higher elevated risk, which is fine because you buy them and that's a maximum risk, right? You pay a certain amount and you know that's the most you could lose. They have an asymmetrical return possibility, and when you're selling options, you do not have that asymmetrical return. So that's how you do it. Now, if you want to take a look at any one trade, let's say this dragonfly here. So you scroll down, you can see the dragonfly here and how it's been behaving since you placed the trade on May 8 in this example. Yeah, May 8. So you can get very granular and transparent. Now, you want to look at your closed positions. That's easy too. Here's the history of all the trades. Gives you a summary here. Out of 20 trades, 18 winners, 2 losers, 15 short option spreads winners, 0 losers, 5 bought positions, 3 were winners, 2 were losers. Totals it all up here. Now, this is just a demo account, so don't make anything of that in terms of what to expect with your account. But nonetheless, you can see here all the activity and all the history easily available. You just click on any one of them and you can see all of the nitty-gritty details. So here's this one here, placed on April 15. You can see the history of it day by day, and then there, took a profit, and that was that. And there's one other thing I want to point out. There's a couple other things, and then I'll show you the best feature of all. Okay, so remember we're looking at the dragonflies and the condors. Those are kind of a neutral strategy or called non-directional. But remember, there are also bullish and bearish strategies. So if you're concerned the stock market might be top heavy, there are bearish strategies here. There's one called the bear hedge. We briefly looked at it in the presentation, and I won't go too deep into it, but this is really what it looks like. You're selling an out of the money call spread. You take that money you collect and you buy an out of the money put spread. So that's what it looks like here. It's all pre-built for you, and then you would submit that order. And then just the same you could do if you were bullish, bull hedge, you could do that as well. Just the opposite, where you're buying an out of the money call spread, but you sell an out of the money put spread to pay for it. Okay. And then of course there are just typical call spreads you can do. But nonetheless, you can be bullish, bearish, or non-directional. The algorithm does the work for you, does all the heavy lifting, chooses the strikes, the expirations, the pricing, everything. And then it will automate that exit strategy for you, whether you hit a gain or a loss. You need to be out of that position. There's also something called Trade Builder. You can build your own trade from scratch. Just choose your market here, your strategy, and then go through the prompts. All right, so here what we're going to do now is I'm going to show you the best feature of all. Okay, does it feel a little bit like that? A lot of information. It's actually very, very simple and effective, and it gets even better, easier. All right, 1 minute trading with trade alerts. So part of Theta Trader are trade alerts, and these are one-touch trades. All you do is touch accept or reject. You receive on your handheld device the alert, and if you like it, you accept it, and then these alerts are live. They're integrated with your own trading account here with AltaVest. So if you like it, you touch accept, and our technology handles the rest, and that's it. If you don't like it, touch reject. And then you saw how Theta Trader, if that order is filled, Theta Trader can then use the RTI, the risk thermal indicator, and then automatically track and manage the position for you. So here's what it looks like. You get a text, you click that link. Just a moment. Here we go. So there's a graph of the trade, a description. And you've got the quantity there. It's all pre-sized for your account. And let's look at that one more time. So you can see, let's see here, there you go. It's sent to you in your account. Here's the net premium you collect, cash required. The size is already selected. This is all integrated with your account, so everything is already done for you. Gives you the metrics, the targeted annualized return, days till expiration, gives you the current futures price. And then if you like it, you just touch accept, and that's it. You don't have to go log into another platform. You don't have to stop what you're doing. You don't have to try to transpose an email and type it into some other platform. That's kind of antiquated if you ask me. So amazing. I think it's an amazing platform, and we've got an amazing offer for you. Everything you need. If you're ready to take action, we're going to show you how. We have our VIP membership. We just started doing this. We've combined our AV Systems platform and the Theta Trader platform. So you get AV systems, automated futures trading, 20 years of development, system programmers, over 1,800 system bots, global US markets, multiple sectors, completely transparent, full control. You turn it off and on whenever you wish. Everything's automated, risk and profit management. There's intraday or swing systems. Of course, you can review all your live performance. You can even download the history. So global stocks, currencies, financials, bonds, metals, energies, grains, you name it. So if you want to build your own system, ask us how we know. It doesn't come cheap. Just to build one system, one algorithm, looking at one program, one market, you're talking probably over $10,000. But here you have over 1,800 available. And then we do this. We call it basically our A-list. We work with you and try to allocate various sectors, build out an A-list of different systems, our top picks, and that's $2,952, all that research. So you have the AV Systems platform over $10,000 value, the A-list $2,900 value, $13,752 value, and then of course the VIP you get Theta Trader, the algo-driven options trading solution. Does all the heavy lifting for you with all the Theta trades. The proprietary algo builds those spreads, simple and effective. Simple trade tracking, you saw how easy that is, and quite frankly, that was a big catalyst for doing Theta Trader. Here's what it looks like trying to track it on your brokerage statement. So it does not work. So you need a better way. That's Theta Trader. Then the RTI automatically will close out that trades for you. You hit the blue, take your trade off for a profit. That's autopilot, non-emotional trading. There you do. That's how you do it right there. Automate it. And Trade Simulator. You saw several simulations we looked at. That's a lot of fun to use. You can go back in time and back test any window of time or any strategy. And then the Trade Builder, you saw that as well. So you have Theta Trades, the RTI, the simulator, and the builder, that software value of $3,588. And here's the best part, I think, the trade alerts. They're integrated with your account. The trades are tailored for you and your account. The sizing's already done, and they're integrated. They're live. You touch accept, and it's done. No more nonsense, no messing around. $4,464 value. I talk to people every week that have different trade alert services, and nobody's doing this. So you have the Theta Trader software and the trade alerts, a value of over $8,000. So the AltaVest VIP, just to summarize, you have AV Systems software, and you have the Theta Trader software, which includes all the trade alerts, valued over $21,000. But here's the best part. Here's what brings it all together. The private coach. This is only with your VIP membership. You have a Series 3 licensed, experienced professional trader working alongside with you. You'll do these screen sharing sessions, and you can cover any number of topics, but here's some examples here. If you need anyone to work with you, they can work with you and go over and review and share their screen and train you on the systems in Theta Trader. And that knowledge is priceless to have that co-pilot with you. You can review your strategy, discuss new trades, develop a relationship. That value at least $7,500. And in fact, here's the thing. You can go online, you can find all sorts of educational resources, and that's fine. And a lot of them are charging 10, 20, 25,000. People are spending money on systems. I talk to them all the time. I had a guy spend 25 grand on trading systems. But with all of what we offer here, that's all included with your VIP membership. So AV Systems, the Theta Trader, the trade alerts, the trading coach, to wrap it all together, a value of over $29,000. And then also we do offer proprietary research, trade scope, and our daily commentary, over $3,000 value there. And then our online video tutorials. So remember, system software, Theta Trader software, the trade alerts, the trading coach, and the research, over $32,000 value. So for the VIP membership, you know how people do this, and I'll get through this quickly because I just sometimes people think, hey, I just want to know how to do this. So here you go. Even at a 50% discount, it'd be a great deal. But remember, with everything we talked about, you can get rid of subscriptions and advisory fees and data fees and so on and so forth. And I talk to people and they're paying you. They say, well, I don't have to do any data. I don't have to pay it if this or nope, you don't. And of course you can save time. So we think the VIP membership is the one thing that'll work for you. So here you go. Like I said, people pay tens of thousands for algo systems and options trading software and trade alerts. With a VIP offer, you get everything for $9.97. In fact, we're going to do even better, 20% discount before Sunday night, $7.97. There's the link, cf.altavest.com/VIP. So it's just that simple. Let me see if I can type that in so you at least have it on the screen. And then I want to show you some other key things and we're going to wrap it up. Okay, so here we go. 30-day guarantee. Keep that in mind too. If you don't like it, you pay your membership fee and you change your mind, that's okay. We're not holding you hostage. It's only $7.97. There's the link. And remember, it's a one-on-one style of service. It's only one payment. It's not quarterly. It's not monthly, annually. People ask that all the time. No, one-time fee, and that is it. Now people ask, okay, here's some FAQs. How do I know which options to sell or which strategies to use? Well, you just want to ladder those strike prices. So if you're doing dragonflies or condors, you place some trades here with the puts and calls, and then as time goes by, you place another set of trades with different strikes, and as time goes by, you place a different set of trades and so forth. So that's kind of the short answer. Can I trade stock options? Nope, we only trade futures options, and specifically the E-mini stock options. And are they tax efficient? Yes. If you're trading individual stocks, you're not trading tax efficiently. So here, $100,000 account gets a 20% return trading stocks. Your rate of return is 12.6%. In this example, same example, your rate of return is 14.64% if you're trading with us, trading futures and futures options. Tax savings of over $2,000 in that example. And you don't have to itemize. So what are the advantages in the E-mini S&P futures options? Well, here you go. Average daily volume is more than all 6,800 ETFs around the globe. So this is where you want to be. It outtrades all ETFs around the world by over 2.5 times. So here's an example here. Here is the E-mini S&P 500 versus the SPY. Look at this here. The futures average daily volume, $192 billion, and the ETFs are $19 billion. So interesting. Even globally, just the E-mini S&P, all global ETFs, everything is still 2.5 times greater. So why ES options? Because they offer superior execution and a savings of $4 to $15 per contract. So that's what we're talking about, the tight bid offer spreads. So here are some advantages, 5 reasons for the E-mini futures options. Deep liquidity, 630,000 average daily volume. I think that's probably even doubled by now. I don't have that latest number. And look at this here. Here's S&P 500 futures options. Okay, see this green line? That represents the E-mini. So 94% of all the S&P 500 futures options are E-minis, the ones that we're trading, the ES. Largest market share, densely packed strikes, 100 annual expirations. And then of course the advantage is you can track just that one market. There's a clear cost structure. There's efficient margin. So what am I talking about? Well, there's no hidden cost. It's not a security option. We trade at the CME group. There's no payment for order flow, and I'm going to show you something real quick. And it's an electronic market for large or small, the Globex Electronic Market Exchange. All orders get equal treatment. That's not how it works with stock trading. Let's say Robinhood, selling out their millennial customers to high frequency traders, making millions. They're making millions of dollars in cash income by selling customer orders to the high frequency trading meat grinder. High frequency traders are not charities. The only reason that they would pay Robinhood tens to hundreds of millions of dollars is that they can exploit the retail customers. So there's no such thing as a free lunch. Look at this from the Tab forum. Schwab and others are casinos, purveyors of financial opioids. The retail stock brokerages are not charities. They will make up lost commission revenue in other ways, buried way down in the guts of their workflow processes where few people notice. Yeah, absolutely, they will. So people ask, what's Theta Trader's performance? Well, it's just a self-directed trading platform. You use the platform, you place your own trades, and you manage your own trades with the, of course, with the help of the platform. And then remember too, all calculations are net of all trading cost. And then here, what's the account size for a VIP? Well, if you're doing AV Systems and Theta Trader, we suggest a minimum of 50 to 100,000, split equally between the two. If you want a free VIP membership, we get this all the time, $100,000 account or more, and then we'll gladly rebate that membership fee. Trading account types, yes, we do trade IRA accounts, absolutely. And why alternatives? Let's wrap it up with this. Well, they may improve diversification and lower portfolio risk. They can potentially reduce overall portfolio volatility, and they may help grow an investor's total return. This is looking at the bigger picture. Stock market, 10-year returns exhibit a strong tendency to regress to the mean, particularly good decades followed by mediocre or worse decades, and vice versa. So what does that mean? The last decade was so outstanding for equities, the next decade is likely to be decidedly less so. So we shall see. Certainly March turned out to be that way. There's a big disconnect, that's for sure. Good article in Barron's last couple weeks ago between stocks and everything else. And then here's just the other day, don't even think about owning stocks unless you want to buy and hold for at least 10 years. That's based on some statistics there from Mark Holbert. Here's Jeremy Grantham. He says over the next 20 years, the real stock market returns will be 2 to 3%. So I don't know if these guys are right, but it does make sense to diversify and have exposure to other elements that are not dependent on the stock market going up every single day or every year or month or whatever it might be. So we like this non-correlation, this alternative investment class. It's not correlated to any benchmark or index. So what does your portfolio look like? All stocks, bonds, or maybe some alternatives. We think it makes sense to have a piece of that pie in alternatives, working with systems and Theta Trader. So you've seen the AltaVest VIP membership. We think it's the answer for automated systems and algo-driven options trading. It's very unique, and it's very user-friendly, and we'd love to have you on board. Give it a try at the AltaVest membership. You can join us, or I guess do nothing, but that's not fun. We'd rather have you join us. So the VIP membership, once again, you have AV Systems, Theta Trader with the trade alerts, all tied together with personal coaching. There is the link, cf.altavest.com/VIP. We invite you to become part of our winning team. If you're long-term serious about success, we'd love to have you with us. And there you have it, folks. And you can reach us, of course, at the phone number if you have any comments or questions, or just go directly to that link there and fill out the form. Super easy, simple to do. Get that discount before it expires Sunday night. And that's the VIP membership. We bring everything together under one umbrella, work with your own personal coach, have access to the systems and the Theta Trader platform. All right, well, I think that's going to wrap that up. And let's see here, I'm getting lots of questions. Let's see if I can get to a few of them. Let's see here. Okay, people are asking about, no, you cannot create your own, you are not able to create your own strategy in AV Systems. Every system in the algo-driven platform is locked down and the code is locked down. And the details of a specific strategy, some of the developers will provide some details. If it's kind of a momentum based, or if it's looking, more to fade the market, or if it's based on some numerous type of statistics or averages or whatever it might be. And let's see, let me take a look here. You do not have to own stocks to do any strategy. And someone said, someone says, I'm making their head spin. All right, well, I guess I'll take that as a compliment maybe, because there is a lot of information there. Yes, absolutely. Currencies, you can trade currencies with the AV Systems platform. The Euro FX, Euro currency is available. I think the British pound as well. And let's see. Someone said there was music on. I have no idea what that means. I was not playing any music. And someone's asking about automated exits. The automated exit strategy you place in the Theta Trader. So what'll happen is you'll get a signal, and Theta Trader will place that order for you to close out the trade at a particular price. So that's how that works. And someone's asking about tier two. No, that's all securities. We're not trading securities. You simply open an account with us. We're a brokerage firm. We've been doing this since 1997. You open an account with us, and you fund it just like you would any other brokerage account, and then you can trade the AV Systems platform and the Theta Trader platform, futures and options. We don't have any of those weird tiers. That's all security stuff. And someone wants to know about the operating system. Everything's cloud-based. So if Microsoft goes out of business, I guess we'd have a problem, but there's not going to be a problem with that. We cannot, unfortunately, work with Canadians. Not up to us. It's just Canadian and U.S. regulatory red tape. And let's see here. All right, I think we're getting through most of the questions. All right, very good. And yes, we are a broker. AltaVest is a brokerage firm. And oh yes, commission rates. The commissions on Theta Trader, they're $5.25. That's flat, and that's all in, and that's round turn. So that means, for example, actually, I thought I had that in the presentation, but I went to some big box sites the other day, and I looked at their commission rates, and they said, one of them said $2.40, but that's per side, okay? And that does not include clearing and exchange fees. And when you add up all those other fees, it's more than what we charge. So our rates are competitive, but you know what? We don't even compete with those people because we're offering a completely different type of service. We have a one-on-one boutique level of service offering much more value. You're going to be able to talk to people, develop a relationship with people, not just a chat bot. So nonetheless, that answers that. We do not trade Bitcoin. Someone said something, they lost our audio. Unfortunately, that was not us. Can it be traded in an IRA? Yes, absolutely. And the alert service is available, of course, to anyone using Theta Trader. And I believe, yes, there will be a recording of the webinar. And you can modify your strategies. I didn't show that, but in Theta Trader, if you want to adjust the strike prices and so forth, you absolutely can. And the Theta Trader is using end of day data. So we're not day trading. It's not a high velocity type of strategy. Remember, we like to be boring. Okay. Okay. Yeah, lots of good questions. I think I'm covering questions are being asked multiple different ways. You do not need any data fees. You need absolutely nothing else. All you need is you open an account with AltaVest, and we provide you access to both platforms, the systems platform and the Theta Trader platform. And yes, you can transfer accounts to us. We have people transferring brokerage accounts to us all the time. That's not an issue. And yes, $7.97 is a one-time fee. That is correct. All right, very good. I think that's going to wrap it up. Someone asking about margin calls. If you're using AV systems, if you're trading with the capital required, then there would be no margin call. And then once you become a VIP member, yeah, absolutely, we get you signed up right away, and then you begin the onboarding process. And we can absolutely do a trust account. I had two people. It takes a little longer, of course, because all the documentation, but absolutely, you can do trust accounts and LLC accounts, corporate accounts, IRA accounts, personal, joint, you name it. All right. Well, thank you, everyone. And I think that's going to wrap it up. I've been talking enough over here. I'm getting tired of my own voice. All right, very good. And yes, ACH funding, that's how you would deposit money or via a bank wire. Absolutely. And yes, you start trading, excuse me, you start your membership with us, $7.97, and you fund your account with $100,000, and we'll gladly rebate that to you. Not a problem. All right, well, thank you everyone for sticking around. That was fun. A lot of good interaction there. And keep in touch. You've got our phone number. You've got our link there. I think I provided the link. Let me double check. Got so many windows and screens open. Here, let me just do this one more time. I'll put the link and the number in there. Okay. And in fact, I will do this. I'll give my direct phone number. Just a moment here. And we'll send that to all. Very good. And people are asking about account size. Well, of course, we suggested anywhere from 50 to 100,000 if you want to do systems and Theta Trader both. And then, so if you had 50,000, you could do 25 in one and 25 in the other, and or just whatever you like. Really, there's no rule, there's no law about it. It's whatever works for you. But we think it makes sense to do that. All right, folks, that's going to do it for me. And have a great one out there. And we'll keep in touch. Look forward to hearing from you. Thanks. Bye-bye.